Hi, this is Peggy from RAR. So today our guest is Darryl Hicks, the founder and CEO of Flexpay. So Flexpay helps merchants recovers credit card declines from online transaction using proprietary machine learning. So thank you so much, Darryl, for being with us today.
Thank you for having me. It's a real pleasure to be here, Peggy.
So I'm looking forward to hearing your thoughts. You know the financial services industry very well. You're a serial entrepreneur, so you know a lot of pressure on saying very intelligent thing in 15 minutes.
No guarantees, no guarantees. But I'm sure we'll have a fun conversation.
I'm sure we will. So, first question for you: what do you believe will be some of the lasting impacts of COVID on the financial services industry?
You know, it's been interesting. I have an advisory board that I built of, people that I've known for many years from previous businesses before I built Flexpay. And some of them are, real titans of industry and the Visa and MasterCard ecosystem. And there are projections that Visa and MasterCard have had on how quickly the economy will move from face-to-face to e-commerce every year. And what we've seen is the next 5 years worth of projections have all happened in 2020,
Oh, wow.
which isn't a surprise to anybody. The more surprising thing is that the current projection is that the habits that we're forming right now as a society in this pandemic, this acceleration into e-commerce is not going to revert. I mean, the pace of growth is most likely going to stabilize, but we're just going to go back to the same trajectory most likely, or maybe it'll be even an accelerated trajectory from where we were before 2020. So there are new habits that have changed. These habits seem to be fairly static and stable. And the companies that were well positioned to take advantage of this significant growth in e-commerce are the ones that are really thriving right now. And the ones that were ill-equipped or had been dragging their heels on a proper digital strategy seem to be the ones that are struggling the most. So I think that if anything, this isn't so much revolutionary as it is to a rapid acceleration of the evolution of what's happening. And more than ever before, for some it might be too late, but more than ever before, we're seeing the focus of every player and every aspect of the financial services industry, from merchants all the way to financial institutions to all the different technology suppliers in the middle, really moving quickly to make sure that their digital strategies are as robust as possible.
Yeah. And we'll discuss a bit later about the competitive positioning, and that's exactly that type of things we're seeing right now. Some fintechs like yours are on fire, which is amazing. Some large players are suffering, so that's an interesting dynamic. In terms of regulation and policies, do you see changes happening following the crisis to accommodate for this new reality?
You know, it's interesting. The regulatory framework. So, we really see a divide in policy. And you and I were talking about this a little bit off camera before our meeting, right? The differences in culture between Europe and even Canada and the United States. Europe has seen PDS2 come through, and many of the various players in the financial services industry were complaining. There was a lot of frustration with PDS2, but overall, I think that you have to really celebrate and appreciate the initiative and the desire and the drive behind it. There is no such pressure really happening in the United States. Now, you can argue whether that's good or whether it's bad, but there are critical technologies out there that will really help, that will really stabilize, that will create more transparency and trust and security, stability in our financial infrastructure, that are not moving as quickly in the United States and Canada as they have been in Europe. And from my seat, I think the primary driver behind that is the lack of regulatory pressure really forcing these changes to happen. The infrastructure in the United States in particular is quite fragile. As we talk to some of the large players who handle significant amounts of switching capacity for, say, the Visa and MasterCard network, I mean, they've cobbled together, 4 debit switches and 2 credit switches and 1 prepaid switch through acquisitions over multiple years, and cobbled them all together into one sort of central technology. And anytime you have a conversation with the executives at these companies about touching something in the primary authorization stream of the card networks, the blood drains from their
Yeah,
faces. And they're like, you don't understand, like the most important thing in the network is that it stays up and reliable, and we must get the transactions through and accurately. And we can't don't touch these systems. They're very, very fragile and delicate and protected, and for good reason, right? And so, they don't want to make these important changes and upgrades that we need in order to create more security and trust and transparency, unless they really have to. There's significant cost associated with this as well, and there's the possibility of damage as well. I mean, you even look at EMV, right? The little chip that we have in cards. I mean, Uganda had it for 13 years before the United States did.
Yeah.
It's literally like turning the Titanic, and there's all kinds of reasons why it was that slow. It wasn't just about technical capacity. There was some political games being played behind the scenes on that as well, which we can talk about later if you want to. But really, it's that making these changes and these upgrades to the infrastructure is like turning the Titanic, and it needs to happen. We're way behind in North America. I'm not saying that the solutions that are being proposed are perfect, but certainly, like, you look at things like 3DS 2.0, a new scheme that's being pushed by MasterCard. It's a massive, massive upgrade to where we are right now. And the rate of adoption is very, very slow, because you need every single stakeholder in the chain, from the merchants to the gateways to the acquirer processors, the networks, the issuing processors, the issuers themselves, and everyone in between, all to support the same scheme. And having that all happen is a very tall feat in the US right now. So will there be regulatory change? I would say no, probably not. Should there be? Maybe. I don't know. I'm more of a free markets kind of guy. I'd like to see that there's a need driven by the market that causes these things to happen. I think the need is there and the change will happen. But, part of the purpose of innovative fintechs like my company, Flexpay, is to get out there and really kind of push the envelope and push these technologies forward and help to convince everyone of the real benefit of rolling them out.
Yeah. And open banking is a topic that comes almost with every interview, because especially in Canada, people have been frustrated with the postponing of the regulations. Obviously, the symbiotic relationships between government and banks make it a bit difficult sometimes to put pressure on these players, especially when you're looking at now. Banks have been quite helpful to the government. So you end up in these situations that exist maybe a bit less in Europe. So the special interest you were mentioning earlier, I think, have a bit of an impact on the pace of the regulations in North America. So
yeah, exactly. It's interesting, this symbiotic relationship, and I love that you touched on that, because I'm a big fan of understanding, how things work at the deepest levels, and there are significant motivations. I mean, the ultimate motivation of a sovereign nation is really to control its currency. It's one of the fundamental pieces, right? How can you have a military? How can you have, in power and influence without really controlling your currency and keeping it strong? And so it's natural and normal that the governments have very tight relationships with the banks. There's a tremendous amount of information that flows back and forth between the banks and the governments. And the banks have benefited from those very cozy relationships with the governments, and the governments have benefited from having clear transparency on where funds are flowing and when and why. It's also opened up opportunities for corruption and bad actors and interesting anti-competitive, movements. It's interesting. As soon as the amount of power that's tied up in the AML regulatory framework, anti-money laundering, is really phenomenal. If someone, the AML and regulatory divisions inside of the banks, as you probably know, you used to work at CIBC, they're above the CEO. They're completely above the law, and they operate in a complete black box with little accountability. And if they decide that something is going to happen and a particular company is going to be punished in a particular way, then they act with complete impunity, really. And you'd like to think that this is never abused, but I've seen firsthand where it certainly looks suspicious on the surface. So yeah, there is a very, very tight relationship between the banks and the governments, and it's a two-way street. And I think that is something that's really slowed down really inhibited some of the regulatory pressure. And again, do we need the regulatory pressure in order to get the technology to move? In some cases, I think the case has been made that yes, it's really a benefit, and we certainly do not see that happening. And I don't think we're going to see it happen anytime soon in North America.
Yeah. Well, there is also a reason why the return on equity of the banks in North America is so much higher than the return on equity of the banks in Europe. Again, one end washes the other, so that's another conversation.
It
Um,
is. It is. It's a rabbit hole.
So you were speaking about sovereign country currency. So that's a very good segue to my next question in terms of global financial order, global stability. Of course, most countries, maybe only Sweden actually, didn't take a massive amount of debt to support their individuals, their businesses during the pandemics. That has driven also even more trade wars, protectionism. Where do you see the global financial order going?
Yeah, these are really interesting times. I mean, I don't think there's anybody that really knows, because the people who feel like they know the best, I think, are suffering from a little bit of the Dunning-Kruger effect. The deeper that you get into this, the more you know, the more you realize that we are really in uncharted waters here.
Okay.
Nobody really knows where we're headed. I mean, the amount of currency that's being printed, there was already a massive balance sheet on the central banks with no real clear path as to how we unwind these positions. Interest rates were already pretty low. I was running my own business in 2001, and then again in 2008, 2009, and now again here in 2020. This is very different from '01 and from '08. This is a very lopsided sort of effect. It's very dramatic, and the government has stepped in quickly to really stimulate the economy by making sure that there's cash coming in, like the CERB program in Canada or PPP in the US. How much of an impact has that really had? It certainly has had some. I think it's difficult to quantify, and unfortunately, it's hard to get good data because these things are incredibly politicized right now, especially in an election year in the United States. But I think any reasonable person is going to say that there's been benefit to this, but I don't see how. I don't know what the long-term consequences and impact of this level of indebtedness at the federal level and at the company level. I mean, certainly at the corporate level, I think that we're going to see some businesses that are going to fail.
I think so. Yeah.
There's just no way that they're going to make it out, and we're starting to see a little bit of a tip of the iceberg of that. Conversely, there are companies out there that are absolutely thriving. I mean, every single we talked about this a little bit before. 95% of the companies that we service are going to have a record year in 2020. They're growing like mad, or at least certainly the digital component of their business is growing like mad. There are some clients that we have that we serve who are 100% digital, 100% e-commerce, and they're just on an absolute tear right now. Everybody's buying online. So this is one thing when everyone's been forced to be home and they still have a little bit of disposable income, especially if you, it's been interesting, if you're running e-com and you're selling luxury shoes, not really a good year for you.
Yeah, exactly.
But if you're an e-com and you're selling home furnishings,
Christmas, yeah.
it's Christmas time, right? I was talking to the company that sold us our pool last year, and he said his sales are up 300% in selling swimming pools, right? Because people can't go on vacation and they're spending. So what we're seeing in the economy is, a very sort of lopsided, where money is shifting around. Overall, there's been a contraction. Even when you talk to executives at Visa and MasterCard, face-to-face transactions still make up today over 50% of the total transaction volume, but not in a world of pandemic. We've seen a massive contraction in face-to-face and a huge expansion in e-commerce as far as the share of transactions. Total volume of everything combined is still down, but the volume of e-com is up dramatically, right? So what that tells you is that there are companies that are really thriving and really doing extremely well right now that will be fine. And there are companies that are just getting absolutely destroyed. What's going to happen to the hospitality sector, right? How's the travel industry doing, and restaurants and hotels and things? They're obviously absolutely getting crushed right now. So I think if you look at the commercial level, there's some real lopsidedness and how that all plays out, and will jobs shift and will the economy adapt? I think that it's going to be a really rocky next few months, and we'll be okay. I'm more concerned about the level of indebtedness at the consumer level and
Mm-hmm.
at the sovereign level.
Yeah, yeah.
And this is where we're really in uncharted waters. At the consumer level, we've been through this before, and we have some tools, and we know how to work through this, and we can. But at the sovereign level, with the governments, how big the governments are getting, and how big of a role they're playing in the economies, with all the printing of money that's going out. It's very interesting. I'm tempted to use the word concerning, but I don't know that we necessarily have to be concerned, because we're just in uncharted territories.
Mm-hmm.
And we could run into an iceberg and the whole thing could sink, or we could just end up in a new normal that'll be beautiful and fantastic. Obviously, I'm an optimist, so I'm hoping for the latter, not the former. But it's very strange times.
You have to be an optimist when you're an entrepreneur, otherwise you're not an entrepreneur, you know.
That's absolutely true.
So going
Strength
back,
and a weakness.
well, yeah, exactly. Going back to the competitive positioning, we spoke a little bit about that earlier in the conversation. So, from your perspective, what type of financial organization is going to be the ones who are going to come up on top from the pandemic?
Yeah, so I'm a big fan of companies that have really bright executives that have been pushing, the digital transformation hard. You look at companies like Adyen,
Mhm.
Checkout.com. Certainly, you put Stripe and Shopify in that conversation. You look at the fraud tools like Count and Forder and New Data and Sift, Spriskified, Signified. All those companies, they're all doing really well. Service providers like Mitigator. These companies are all thriving because they're technology players in the financial services industry that are really focused on helping companies move to the digital transformation and doing it securely and transparently, and offering really robust services. And no surprise, all those companies that I mentioned are absolutely crushing it right
Mhm,
now.
mhm.
Right? You look at the traditional sort of financial institutions and banks and branches, even though they're very well positioned with, their very cozy relationships with the government, they still are facing some very real problems. You look at a lot of regional banks and credit unions, they're really struggling right now. So I think that, unsurprisingly, this has been a slow moving ship for several years. There's no new information. That's why I say it's not revolutionary. It's just a rapid acceleration of the evolution. So the companies that were well positioned with a very robust digital strategy, helping financial institutions and helping companies and consumers to move into the digital world in a safe, secure, transparent way, are doing incredibly well right now. And the ones that were sort of like stay the course, conservative, not a very good digital strategy, are in real trouble right now and are being displaced at an incredibly rapid pace by the incumbent bias is very, very weak in consumers and in businesses in the United States and financial services. If someone comes with a better product at a better price that's more convenient or has better selection, people will switch very quickly, and we see that happening a lot. So I think there's real risk, especially at the regional bank and the credit union level.
Well, and I think people had the time to research more. So in the past, there is this day to day, I do the same thing tomorrow when I was doing yesterday. Now you're in such uncharted territory, as you mentioned, but I know for myself, I use digital tools I have never looked into before because, well, never took 2 hours to start, fiddling with whatever. Now I'm like, oh, well, that's great. Actually, that makes me save money, win time, whatever. I think that's also this opportunity. There is the acceleration in terms of need because you're stuck at home, but also because you have maybe this curiosity you didn't have before.
Yes.
Going back to large organizations, so in terms of financial institutions, digital transformation, sometimes that has been slow moving. We were discussing that as well briefly before. What do you see traditional FIs going?
Um, there's been a really great model out there by some traditional FIs building incubators for fintech, actively acquiring fintechs. I think that that's a good strategy for injecting some of that into their DNA. Unfortunately, for a lot of the startups, the DNA works more the other way than it does bringing the positive DNA
Exactly.
into the banks. And financial institutions are heavily regulated entities, and they have to be. I mean, the two most regulated aspects of our society are healthcare and financial services, because
Mhm.
one's messing with your health and the other's messing with your money, right? And so
Exactly.
we need these to be heavily regulated. And as soon as they're heavily regulated, they move very slowly. They tend to be conservative. There's a real lack of innovation. So I think the innovation has to happen with this real acceleration. I mean, we're seeing way more cyber crime and bad actors. I mean, this happened even, moving outside of financial services. Look at what happened to Zoom. Zoom was a great tool, but as soon as there was enough people on Zoom, now it was interesting for the cyber hackers and thieves to come in and start, playing games and wreaking havoc in the system. So the same thing is happening absolutely in the financial services industry. As there's a broader pool of business that's moving into digital, it's more of an attractive target for the cyber thieves and the hackers, and we follow this activity very closely. And there's a huge increase in the tools and the sophistication. Again, not revolutionary, but a rapid acceleration of the evolution. And I think that the FIs are lagging behind in not just in being able to offer better services, more convenient at less cost, but also to make sure that they maintain the trust and the security and the stability within their infrastructure. They're going to have to work more closely with the fintechs, because let's be real, innovation doesn't typically happen inside of big banks. That's not what they're built to do. As much as they might like to think they can create an innovation lab, that model has not worked out well. I'm a big fan of looking at, what works versus what doesn't, what hasn't worked, right? And so working closely with the fintechs and adopting that technology and acquiring it and bolting it in, maybe that will help. But I think what's more likely is that you're going to see the very well capitalized, companies that have brands that already have significant trust are going to move into financial services and really start to upset the apple cart. You're going to see Apple. Well, we already see it, right? Apple and Google that are coming in and making a really, really big push with their own financial service products. And they have more brand trust than, say, a Bank of America or a Chase, even those really big banks. It's never going to go, they're not going to go to zero. I just think that there's going to be a lot of fragile companies that are going to go under, and we're going to see a real shift in balance of power, which is going to bring all kinds of interesting opportunities and problems with it. I'm very excited about this.
I think you're saying that second wave of evolution in fintech. So if you're thinking about, Shopify partnering with a firm to offer is buy now, pay later. The only thing I'm getting worried is that a lot of that is in the lending space right now. How do you decision who's going to have the capacity and the willingness to repay is another story. I would not personally touch lending very much at this point. So, but it's always the same thing. It always starts with payments and lending, because that's where you have the biggest pool of money and the biggest inefficiency, but to your point earlier. So you started 10, 15 years ago, 15, 20, even with like the lending club on the lending side, obviously PayPal before that. Then you had everything, wealth management, capital markets. Now it's the second wave, and a lot of that is linked with partnership, and instead of being direct to clients, helping large tech offering financial services. But Goldman has been doing a lot in the lending space with partners that JetBlue, for example, is a big partner of Goldman. But the Apple credit card, all of that, I'm like, oh my God, that's a lot of lending exposure on top of your already strong lending exposure. And with Marcus, anyway, I'm afraid all of that's going to finish in tears personally, but I'm not sure if
I think there's a high degree of likelihood that you are right, and that it's going to be a very bumpy road. And another interesting point out of that is that what is good for the corporate bottom line and corporate profits is not always good for society as a whole. It's tough for me to talk about that as an entrepreneur and a CEO of a for-profit company, but it's something that I really think about a lot on the personal level. And it runs deep in the DNA of my organization as well. Like, are we doing what's really moral and what's really right, which is also profitable, right? But there's definitely movement and activity that's happening that has me pretty scared right now. Not all things that are possible are advantageous.
Mm-hmm.
And again, I guess this is where the role of regulation comes in, and regulatory structure, and people that in the public domain come in and sort of put some controls and constraints and make sure that things are distributed fairly. But I don't think that right now, because things have transformed so quickly, I don't even know that the regulators really understand what it is that they're playing with, or how to control this. And what happens more often than not lately is that they make things worse and they make things more of a mess, or they're not really attacking the true underlying problem. I mean, we've seen a lot of this even in the government intervention in financial bailout for companies. The way the programs have been rolled out, some of them have been very good and they're very appreciated. Some of them have just been an absolute nightmare and a train wreck. Like amateur hour is the way that a lot of people feel about it, right? And again, it's just, well, it's kind of normal, right? Government doesn't understand business because they're not business, they're government, right? So they want to come in and they want to help and they do this and they do that. And it's like, whoa, we've got misalignment of incentives all over the place and creating problems. And it's been a real gong show. But so I mean, there's no really easy, clear path forward, but I agree with you that there's a lot of risk. There's a lot of risk right now in some of these changes.
Well, and the disconnect, you mentioned the disconnect in speed, exactly, with the technology changes and the regulations. But, you know, you look at the hearings that have been happening, you know, in the recent past, very recent past, with big tech, you know, the people asking questions have no clue what they're talking about. So questions, you almost feel sad for them if they were not that powerful of men. But looking at that, I'm like, you just look ridiculous. You know, ask maybe your young 30-year-old wrote the briefing notes to ask the question, so at least they can have intelligent follow-on questions when they get the answers. You know, so how can you?
Why did you not ask that question? The door was open. You should have asked that question. This is the direction you need to go. What are you doing over here? What do you anyway, yeah. Anyway, I had to stop watching. It was just as ridiculous.
It's sad and painful to watch, but anyway. So let's finish with a question a bit lighter and a bit more personal, maybe. So regarding your own transformation over the last few months, did you pick up new habits during this time at home?
Yeah, definitely. I mean, we order a lot more groceries into the house than we ever did before. I mean, and I don't think that that's going to stop. I mean, when the pandemic first started, we came back from spring break, and a month into the lockdown, I looked at my wife and said, have either one of us been to the grocery store at the bottom of the street in the last month? And the answer was no. And there was no disruption in our lives. I'm a foodie, and I loved going out to restaurants, and I live in Montreal, and great food and great restaurants is a really deep part of the culture of the city. I really miss going out to restaurants, but I have no interest in going out to a restaurant right now in the current climate and the different restrictions that are being imposed. It's not going to be fun. It's not going to be enjoyable, but I still have that craving for, you know, a fun sort of, you know, culinary experience. So restaurants that can deliver a really high quality experience by order in, or, you know, going and getting the ingredients and cooking ourselves at home. That's been a real, we were always doing it before, but we do a lot more of it. We've been much more fun and creative in what we do with food, and spending on nice wine and good meals and things at home. Obviously investing, like everyone else, investing into our home, because we spend so much time here. And so every little crack and thing that is just, it drives you nuts because you're there all day now, right? You have no choice but to do something about it. So that's been an interesting transformation. And work from home. We talked a little bit about this before, but I think net, it's more positive than negative for me and for my team. Our employee net promoter score has never been higher. Productivity is up, efficiency is up, employee happiness is up. There's advantages to being on Zoom, even for our town hall meetings and our stand-ups. Everyone has one camera in the face. I feel like we can see people more and we interact more directly with everyone there. And yet you'll never, ever replace the energy of being in a room when you're working on creative ideas. You get so much more value out of being there together when you're working on hard, blue sky, creative solution, problems that require creative solutions. And I find that emotionally and mentally, I'm dragging every once in a while. I'm finding it hard to keep myself, driven. I've
Mm.
been driven my whole career. And I feel like my employees don't notice it because I've been asking them, and it's not something that they see, but I feel it. There's
Mhm.
something about being at home all the time, even though Zoom and Skype and Teams is great. Thank goodness for these technologies that allow us to all work from home right now. But that's a transformation, a big one for me, that has had some pretty significant and deep impacts that I'm still untangling and trying to figure out. I want to find a way to keep the positives and mitigate the weaknesses, but I'm not even really sure exactly what the weaknesses are yet, or how to identify them, let alone what to do about them. But it's an interesting journey that we're on. So yeah, there's a lot of things that have changed.
Yeah, I found that having a schedule has helped me making sure that the first thing I do is not working and the last thing I do is not working. So making sure every morning I'm doing my meditation, yoga kundalini and all of that has helped me keep my motivation, energy high. And as soon as I drop that, and then so I catch myself. So I think most of us, you feeling under house arrest. It's difficult to feel yoo-hoo when, the Friday looks like the Monday, looks like the Wednesday, looks like the Sunday. So
It's so true. It's so true.
trying
It's
to put a
brutal.
bit of a schedule yourself is probably, at least for me, that's what has been the most helpful actually.
One thing that's really helped me a lot is this productivity planner, and for some reason I got away from it. I've gone through like a dozen of these, and for some reason when the pandemic first started, I kind of moved away from it, and there's like this big gap in here of, I did it a little bit in April, and then May, June, it just kind of disappeared.
Yeah,
So I'm getting
yeah.
back to this, and my tasks and holding myself accountable to what I need to work on. And that's helping a little bit, but the meditation, I forgot about that. And I think maybe that's a really good piece of advice that I need to.
I'll send you some yoga kundalini YouTube that you can do with your entire family. You'll all feel very energized with that.
Please, I would love it. I would love it.
Well, thank you so much, Darryl, for taking the time, and glad to hear that the business is on fire for you and most of your clients. It's always an uplifting thing to know, and really looking to our next conversation because that has been really fun and informative. So thank you so much.
Thank you, Peggy. I really enjoyed it.
Thank you. Bye bye.
Bye bye.